What's up, everybody? I'm Thomas. Welcome back. If you're starting a business and stuck between choosing an LLC or an LLP, you're not alone. Today, we'll break down the key differences between these two business structures to help you decide which one fits your needs best. By the end, you'll have a clear understanding of which one is right for you. Let's get started. First up, an LLP or limited liability partnership. This structure is typically used by licensed professionals like attorneys, accountants, and doctors. An LLP allows partners to share responsibility, but each is protected from being personally liable for their partner's mistakes. So if one partner makes an error, the others aren't legally or financially affected by it. Let's quickly go over the pros and cons of forming an LLP. All right, the pros: shared liability protection, flexible management structure, and pass-through taxation, meaning that the business doesn't pay taxes. Profits go to partners who report them on their individual returns. As for the cons, liability protection can be limited in certain states. It's only available to certain licensed professionals. If you're a licensed professional and want flexibility while sharing responsibility with partners, an LLP might be the way to go. But keep in mind that liability protection varies by state. Now let's talk about LLCs, or limited liability companies. Unlike LLPs, anyone can form an LLC. This structure creates a separate legal entity for the business, meaning it can own property, take on debts, and open a bank account, independent of its owners or members. This setup is especially popular among small business owners for its liability protection and tax flexibility. Like any structure, LLCs have their pros and cons. Pros: strong protection for your personal assets. Flexible management structure, meaning it can be run by members or managers. Pass-through taxation options, or you can choose to be taxed as a corporation. Some of the cons include, in some states, LLCs have a limited lifespan unless renewed, and members must pay self-employment taxes. LLCs provide strong protection and flexibility, but remember the self-employment tax obligations. So, let's explore some key differences between LLPs and LLCs. The formation. LLCs can be formed by anyone, while LLPs are restricted to certain licensed professionals. You can have a single member LLC, but an LLP requires at least 2 partners. Liability protection. LLCs generally offer more comprehensive protection. Members are only liable for what they contribute. In an LLP, liability protection mainly applies to your partner's actions, so it's often paired with malpractice insurance. However, the biggest difference is that an LLP is a partnership, while an LLC can be owned by one or more individuals. This leads to differences in ownership, management, and taxation. Both LLPs and LLCs offer liability protection and flexibility in management. The major similarity: both protect owners' personal assets from businesses' liabilities. Taxation is another key difference. LLCs offer flexibility. You can be taxed as a sole proprietor, a partnership, or even as a corporation. LLPs are always taxed as partnerships, with profits passing through to the partner's personal return. Both structures provide pass-through taxation, meaning the business doesn't pay corporate taxes. Profits are reported on personal returns. Knowing all of this, how do you choose the right structure? Here are 3 key questions to ask yourself. Are you a licensed professional? If yes, an LLP could be for you. Are you forming this business with more than one person? LLPs require multiple partners, but LLCs can be solo owned. Do you need strong liability protection? If liability protection is critical, LLCs offer far more comprehensive coverage. If you're a licensed professional working with partners, an LLP might make sense. But for most small businesses, an LLC provides more flexibility and protection. In conclusion, both LLCs and LLPs offer excellent options for protecting your business and your personal assets. Your choice comes down to your profession, ownership structure, and desired level of liability protection. Always consult with a legal or tax professional to ensure you choose the right structure for your situation. If you found this video helpful, give it a thumbs up and subscribe for more business tips. Thanks for watching, and I will see you in the next video.